Okay, in this video, I'm going to tell you why I stopped watching ICT, and I've been through the 2021, 2022, 2023, and part of the 2024 mentorship. It was in 2024 that I finally decided to stop watching ICT. I spent years studying ICT, and in this video, I'm going to tell you why I decided to stop watching ICT, and more importantly, why I think you should stop watching ICT too. But let me just say before we get into the video, that ICT's concepts are completely legit, right? They're completely legit. Before I started trading ICT, I had no idea where price was going to go. I had no idea about trading, and I lost. Like I almost never had a winner. Like, how sad is that? I almost never had a winner. I was using indicators and I was paying for random courses. And I kept losing. I'm telling you, his concepts are completely legit. Like, I can just predict these markets like a book. Like right here, I mean, this is a brilliant example. In live price action, I can tell you exactly where price is going to go. It's going to go straight for this low. Straight for this low here, right? Why do I know it's going to go for this low? There's no respect of this order block here. Price is right down here, right next to it. There's no fair value gap, no order block. Price is going to go for the next liquidity pool, which is here, right? And the thing is with ICT, lots of people will say he's a scam, he's a fraud. He is not a fraud, right? If you spend the time learning his concept, you can become a profitable trader, and you can become very profitable, right? I'm an example of that. You can become very profitable, and I've moved all the stuff on YouTube. It's all for free. You can become profitable using his stuff. But why do I say to stop watching ICT? Why am I telling you to stop watching ICT? And the reason is very simple. You have enough already. You already have enough to be profitable. You have so much stuff out there to choose from that it's actually hard, right? It's actually so hard to decide what to pick for a model. And this is what held me back for years, right? For years, I was studying ICT, and I wouldn't get into the charts, right? Because the best experience is in the charts. It's live experience trading these markets, right? Watching ICT's, 2-hour live stream, that's not going to make you profitable. But you trading for 2 hours, or you tape reading yourself on your own for 2 hours, that will make you profitable, right? And the key thing with ICT is you need to pick a model. You need to pick a model, a simple model, and start making money with it right away. Don't keep watching every live stream. Don't look for every PD array, because you don't need them. And let me show you right now. Right now, I will tell you my model. After spending years of studying ICT, after knowing every little concept there is, inversion fair value gaps, mitigation blocks, breaker blocks, central bank dealing range. After all that, this is my model. I'll show you it right here in price action. So we've got this low that price is going to go for, right? No order block, no respect to this. And we have our liquidity sweep, which is this wick here. So let me show you this. This wick here points up, takes out those highs, instantly shoots down. That's your liquidity sweep. So let me just mark that out very quickly. Right, so we have our liquidity sweep here. Price instantly, aggressively moves in the opposite direction. We've got clear liquidity. My entry pattern is literally, after all I've done, is an optimal trade entry on the 4-hour chart, right? Put your Fibonacci from the high all the way to the low. Enter on the 0.705 levels. Let me just get the settings up quickly. This is the optimal trade entry, right? And I'm going to talk more about this in a minute. This is one of the 3 easy entry patterns, right? The 3 easy entry patterns that ICT has, being the fair value gap, the order block, and the optimal trade entry. And the key thing is, and this is so important, make sure you pay attention to this. The key thing is you choose one of them. You choose one of them of a fair value gap, order block, or optimal trade entry. You don't use all of them. You don't use order blocks and fair value gaps and optimal trade entry. Use one of them. Use one of them and target liquidity, and you can be profitable. Trust me. And this is a perfect example. So you can enter a 0.705 level like this, right? This would be my entry, literally in live price action, right? So I'm not even joking. If price comes up to here, I will put money behind this on my funded account. Like, it's that easy, that simple. And I just aim for 3-to-1. Like this, right? Like that. You get the point, don't you? Simple, easy, free risk to reward ratio, liquidity sweep, optimal trade entry, 4-hour chart. All you need. All you need. And that's all I do, right? That's literally all I do. I don't look at breaker blocks. I don't look at mitigation blocks. I don't look at central bank dealing rate. I don't look at any of that. And in fact, I had to unlearn so much of that. Because I tried to include everything into a model. You don't need that. ICT is giving you more than enough to be profitable. And the key thing is, you want to choose the simplest model possible. Simple makes money in trading. And it took me years to figure this out, because ICT makes it, I don't want to say he makes it deliberately complicated, right? Because he's obviously trying his best. But man, he makes it, it is complicated as concepts. It is very complicated as concepts. And he's always adding a new one, like almost every month. There's a new concept you need to learn, a new concept you need to learn. Key thing is, you don't need to learn the concepts. All you need to be a profitable trader, and make sure you write this down, all you need to be a profitable trader is liquidity, which is just a key high and key low. That's all it is, key highs and key lows. Where would people stop loss orders be? Right, stop loss orders here, stop loss orders here. Right, there's some stop loss orders here, which is why we have a liquidity sweep. That is what liquidity actually is. And then you want to look for either a fair value gap, optimal trade entry, or order block. That's it. You can build any trading model off that, and I'm gonna show you on the lower time frames how you can do that on GBP USD. And yeah, let's go to lower time frames and let's see what we can see. Okay, so we know we're bearish. We've got that key 4-hour low that we're targeting, right? The key thing with ICT is that is literally daily bias, right? Let me just show you again. Let me just make it very clear. This right here, let's show you it right here. This right here is your daily bias, right? That low right here is daily bias. That means you're bearish. You're bearish and you're targeting this low, right? This is what we're targeting. So we're only looking for shorts, right? That's what daily bias actually is. Daily bias is just where's the most obvious liquidity pool. That's all it is. Where's the most obvious liquidity pool? Are we bearish or are we bullish, right? Obviously, we're bearish here, right? No respect of any order block. No respect of any order block. And, you know, and let me just, let me mark the order block out here. So we got the body of the order block, which is the most important thing. Does that look like price has respected the order block? Right? Does it look like it's respected it? No, of course not. It's closed through. It's broken through. If price was going to respect the order block, it would have tapped it, instantly jumped off, right, like that. It hasn't done that at all. So what that actually means is we're bearish, our daily bias is bearish, we're only looking for shorts. So we get on the lower time frames and we just look for shorts. Right? That's all we're going to do. So let me show you again on the 5-minute. Any entry pattern will do. Okay, so here we are in New York on GBP USD, right? The kill zone 7 till 10 a.m. The kill zones are very easy and self-explanatory. Silver bullets, all that sort of thing, right? Key thing is, if you're a day trader, you just need a key time of day. Not that hard. London, New York, or Asia, or a silver bullet, which is essentially in one of those sessions, right? All you need. Now, ICT himself says this, right? He says it himself. The entry pattern is the least important thing, and it's so true, right? I used to obsess over it for ages. The entry pattern is the least important thing. All you need is liquidity, and then a fair value gap, optimal trade entry, or order block. The key thing is you choose one of them. You choose one of them. That's all you need. I'm going to show you here, right? So we're bearish on GBP USD, and we all know the last up close candle before the down move, that's your order block, right? That's your order block right here. So this could be your entry right here. So you can enter on the order block. You just get tagged in. Stop loss at this high, right? 8 pip stop loss. Target the low, right? Now, obviously, you know, I usually say target a 3 risk to reward ratio and no more than that. But look, here's a 4-to-1, right? An easy high probability sell using ICT's concepts. And this would be my personal entry, optimal trade entry. Like that, right? And this is what I would do when I was a day trader and a scalper. Nice, easy, stop loss at the high. Like that. Target a 3 risk to reward ratio. Nice, easy sell. Nice, easy sell, like that. And, you know, there's no fair value gap here, right? There's no fair value gap here. This is why I say just choose one of them, right? Just literally just choose one entry pattern and just master it. Like for me, I mastered the optimal trade entry because all my eyes can see is the optimal trade entry, right? Because this is your optimal trade entry. We're bearish, price comes up, you sell, right? So let me just make this a bit more clear. My eyes, all they can see is that, right? There's your optimal trade entry. Again, here's your optimal trade entry. Again, right? Because the optimal trade entry, it really is sell the rallies, buy the dip, right? So the bullish example of optimal trade entries like that, right? You buy the dip, like that, buy the dip, like that, right? And this is so important. This is so important. Make sure you understand this. When you watch ICT, right? So that, remember the first time you started watching ICT and he told you about an order block, he told you about a fair value gap, and he told you about an optimal trade entry. There would have been one of those entry patterns that right away your eyes would have seen. Like right away, even to this point, there's probably one of them which instantly jumps out to you. So you might have struggled to see the optimal trade entry, but you might have instantly seen the order block. Whichever of these three, of the optimal trade entry, order block, and fair value gap that you see, use that. I'm telling you, please use that, because that is your entry model. That is your entry model. Because for me, as soon as I listened to ICT, as soon as he mentioned the optimal trade entry, that's all my eyes could see. But when he said fair value gaps and stuff, I had to like look quite hard into price action to actually find it. So there's a little one here. But when I was starting out, this might sound stupid. I had to go onto the indicators, and then there's probably one here. I used to type in fair value gap. Let me see if we can get it. Yeah, fair value gap indicator. Think about that. Like, it was so hard for me to even spot it. I had to look for an indicator just to fair value gaps. Now, if you have to do that, if it's really hard for you to see the optimal trade entry or fair value gap, do not use it. But if it's really easy to see the order block, that just jumps out of the charts to you all the time. You see the order block here, you see an order block here, you see an order block here, here. If you see that, that is your entry model. That is your entry model. Make your life easy, right? You want something that jumps out of the charts to you. And for me, it's always the optimal trade entry. Again, you've got another one here. So let me just mark it out again. So you got another optimal trade entry here, right? I'm not going to actually do the entry and stuff. You enter here. If you missed it, here's another one. And look, and let me show you again. Here's another one right here. Right there. Easy peasy, right? Easy peasy. Now, I know this isn't a key time of day, which is why price just chops around for a bit. But you get the point, don't you? It just jumps out of the charts. And the key thing with ICT is, understand the concept quickly get into live trading. And by live trading, I mean like looking at the markets live, right? So this is live markets. Look at the markets live, tape read, demo trade and stuff. But you need to get experience, because no one will tell you this. There is nothing that taught me more in trading than actually being in the charts, going on losing streaks, blowing accounts, failing prop firms, passing prop firms, going on winning streaks. That is what taught me the most. That's what's taught me almost everything that I know, right? It's all good. It's all well and good saying about, all the theory and stuff, but can you actually apply it? At the end of the day, we got here to make money. We didn't come here to study endlessly. We came here to make money. And younger me, he could have been profitable a lot sooner, probably a year earlier, but he was just obsessed with, learning every single ICT video that kept coming out and out and out. And this is why I'm telling you, you need to stop watching ICT. You just stop watching ICT. I had to unsubscribe from his channel, right? Because it kept coming up with my recommended. I had to unsubscribe from his channel and then click on the don't recommend this channel, just because it kept popping up and distracting me. Because ICT will, he will release what is it, like a Reaper PD array or some shit like that, and then you'll end up falling for it. You end up, let me change my model. And especially if you're on a losing streak, because let's say you've got an optimal trade entry, right? And let's say you're on a losing streak, ICT releases a new video, right? A new PD array. You're going to start choosing that. You're going to use a breaker, inversion fair value gap, whatever's popular, right? It seems like inversion fair value gaps are popular. Whatever's popular, you're going to keep using, and you're going to go around and round and round in circles, right? Do you know how many times, right? Do you honestly know how many times I came so close to giving up the optimal trade entry? And I did, and I'd go pick another crappy PD array and I'd come back, right? So many times, but yet I'm profitable with an optimal trade entry. I'm telling you, I know all these traders. They all use either one of these three entry patterns: a fair value gap, right? They master the fair value gap, that's the entry and the target in liquidity. They use an order block, or they're using an optimal trade entry, right? That's what they're using. They're not using, an inversion PD, order block array, any of that crap. They're not using any of it. They're using a simple bread and butter model, right? The hard work here, and it's pretty easy, which is predicting price, right? Predicting where price is going to go. So let's just quickly go through some examples of just predicting price. Let's just get the majors up. So we've got Euro USD. Right, where are we going to go here? We're bearish. We're going to go for this low here, right? Why are we going to go for this low? No respect of any order block here. And again, this is your liquidity sweeps. Let me just make it more obvious, right? This is how you tape read ICT. Right? This is how you actually do it. You don't rely on him to give you the bias every time. You've got to actually go in the charts and think for yourself. So here is your liquidity sweep. Right? Liquidity sweep like that. Liquidity sweep, wick. Price goes down. And here's something else for your notes, right? So I said, use liquidity, and there's essentially two ways you can use liquidity. The first is like I'm doing here, right? So let's just go to that. It's just to target like highs and lows, right? Everyone knows about that. You target highs, you target lows. That's liquidity. The second type of liquidity, and I always say this on the channel, is a liquidity sweep. And ICT, for all the good he doesn't talk too much about this, right? Because I had to figure this out from a lot of losing, trust me. Lots of losing, lots of blown prop firm challenges taught me this. And please, please, please do pay attention to this. Always wait for a liquidity sweep before you enter. I cannot say this enough. Please wait for a liquidity sweep before you enter. Because how many times have you done this? For how many times have you been bearish? You predicted the bias. You did happy, excited because your bias before you came onto the YouTube video is the exact same as ICT's. You did happy. You're looking to short euro. Let's say, right? You're looking to short euro. Let's say some fair value gap here. You've entered on this fair value gap. Your stop loss is there. Price comes all the way up, takes out your stop loss, instantly goes down, retraces up, and goes straight to your take profit. Right? Straight to your take profit. Literally, this is just a tiny little wick, takes out your stop loss, and goes massively. That used to happen to me all the time, right? But, baby little me used to have my optimal trade entry stop loss there, thinking I was nice and safe. Price would come, take me out, liver retracement, go straight to my take profit. And it'd be so annoying. And the reason why that is because you haven't waited for a liquidity sweep. You've got to wait for a liquidity sweep. Wait for a liquidity sweep and then enter. And this is the 4-hour chart. Obviously, most people don't trade the 4-hour chart, but if this is on the 5-minute chart, the exact same principles would apply. Right, but anyway, right, we're on the higher time frames. We know the bias. We're bearish. What does that mean? It means you get in the lower time frames and you only look for shorts. This right here is daily bias. Right, you don't need to overcomplicate daily bias. You don't need to give it a bunch of terms. Daily bias is just where are we going to go in the higher time frames. Where are we going to go? We're clearly bearish, right? This order block's getting respected. This fair value gap's getting respected. We're going to go for, we went for this low here, right? This was an easy short all the way down here. And then we're probably going to go for this low next, and then this low next, right? That's what daily bias is. You don't need to overcomplicate it. You don't need to use a million different things. That's what daily bias is. And let me give you more examples so you guys get this. So, we've done GBP USD. So let's get an AUD USD. Again, super bearish. I'd mark this out personally. So let me just, let's just get on the weekly chart. I know ICT talks about this a lot, right? like that, right? Exact same principles apply. Exact same principles apply. This right here is a weekly low. Every single candlestick, and this is for your notes, every single candlestick on the weekly chart is so important. Why is it so important? Because smart money, right, has lots and lots and lots of orders here. Remember, this is the weekly chart, so you've got billions, literally billions worth of, AUD, USD at these lows, right? So each weekly low is important. Has there been any respect of any sort of order block, right? Has there been any respect here? No, not really, right? No fair value gaps getting respected. Price is bearish. And again, here's your liquidity sweep, right? These wicks, liquidity there, liquidity sweep drops massively. There's your weekly bias, right? Higher time frame bias, whatever you want to call it. Weekly bias, daily bias, whatever you want to call it. That's it, done. Right there. Simple, easy. You get on the lower time frames, you look for shorts. That's easy. Right, again, I'm on NZD, USD. We're bearish. We've taken out this low. No respect of any order blocks here. No respect of this order block. Here's our next weekly low we're going to go for. We just look for shorts, right? And again, here's your liquidity sweep, right? That right there is daily bias done in like 15 seconds. That's how easy it can be. Now, obviously, if you're starting out, it's going to take a bit, it's going to take a bit longer. But this is all you're looking for. All you're looking for is the bias. You get on the lower time frames, order block, optimal trade entry, fair value gap, whichever one you like. All right, let's get on dollar CAD. All right, dollar CAD, we're bullish. You can see my actual trade setups there. So let's just remove that. Let's get the weekly chart up. Lots of highs here, right? See this high here. Lots of highs. Smart this out here. Right, bullish. Very obvious, very easy where we're going to go for, right? No messing around. Only look for longs. Dollar against the Swiss franc. This is a bit of SMT divergence. I don't want to get too much into this because I don't want to make it too much complicated. But all this means is, you see how we've taken out this high here? Right, look at this high. See how we've taken this high out? Or we haven't taken out here. What that means is that the dollar CAD here is a lot more bullish than dollar against the Swiss franc. Right, a lot more bullish against dollar against the Swiss franc. So that means you want to look for shorts here, and you want to look for longs in dollar CAD. Right, that's simple. That's all that means. Right, nothing too complicated. That's called SMT divergence. You don't need to, you don't need to worry about that. You don't need to obsess over that. All you need to focus on is liquidity. That's it. And last but not least, let's get on dollar yen. Again, dollar yen got this high that is not taken out. That means it's going to be bullish, but it's nowhere near as bullish as dollar CAD. So the highest probability setups are in dollar CAD. Right, that easy. And then once you've got your higher time frame bias, get in the lower time frames and look for your entry pattern. That easy, that simple. But yeah, that's why I stopped watching ICT. I'm telling you, nothing beats getting into the charts, right? You can't just, you can't just study your way to profitability. You actually have to do things. You actually have to get into the charts. And nothing beats experience. Nothing beats experience. Because what made me profitable was applying ICT's concepts, not learning them, applying his concepts in live trading and simplifying it. I'm telling you, you do not need a lot to be profitable. The most profitable traders that you see on YouTube and all that, they have the simplest models possible. They have the easiest, simplest models possible. They do not make it complicated on themselves. They're doing the higher time frame analysis that I've shown you here, and they're looking for any sort of entry pattern. Any sort of entry pattern. And let's just get on the 5 minutes super quick and just see any sort of entry pattern that we can see on dollar CAD, right? So for any sort of entry pattern. So we're looking for longs. Is there any sort of entry pattern? Again, we've got our fair value we've got our optimal trade entry. Like that. You've got your fair value gap. Let me mark this out, right? Fair value gap. Like that. That could be your entry. And again, you've got your order block. Like that. 3 to 1. Nice, easy, high probability setup. You see that? You see how all three of them work? Optimal trade entry, fair value gap, order block. You do not need a lot to be profitable. I'm telling you, you do not need a lot to be profitable. That is enough to make you a millionaire. 10k a month, 100k a month, a million a month. Literally, however much you want, it's enough to make you all the money in the world. You do not need to be complicated. You do not need to overcomplicate trading. You don't need to keep watching ICT. If you just understood what I've said in this video, right? If you understand liquidity, you understand what a fair value gap is, an order block is, and an optimal trade entry is, and a liquidity sweep, you can be profitable. You can easily be profitable. And the only thing holding you back is yourself and your psychology, right? No one else is holding you back. There's no lack of technical analysis. There's no miracle that I do, on the higher time frames. There's nothing else I do apart from what I just showed you there. I just look for a 4-hour optimal trade entry. That's it. And I'm wildly profitable with it. I'm wildly profitable with it. And that's all you need to be a profitable trader. So please, please, please stop watching ICT, get into the charts, master your own model, pick one setup and become a master it and make all the money in the world. Make all the money in the world you want, but it's only going to come when you make a decision to stop watching ICT and practice what you've learned. But yeah, that's all there is to this video. If you did like it, please like, subscribe, and leave a comment for the algorithm. And make sure you follow me on Twitter because I call these markets live consistently. And one day you'll be able to call these markets live too. And yeah, I'll see you guys in the next video. Peace.